dead zone. There's like no signs of any productive life going on.
The word I like to use is desolate.
You're not really going to beat the cash flow that you're going to get in Baltimore in the vast majority of the rest of the U.S.
A lot of bombed out buildings, a lot of craziness, but the cash flow, like Matt had said, was there. And the geography between New York and D.C. was just really good.
Some of the investment that's coming into Baltimore, I all think bode favorably for continued investment from a not private equity perspective, but from an institutional capital perspective. And I think that bodes well for all of us and what we're doing.
It's often nice when we make mistakes, but we still make money because we're carried up by the market, which is nice.
I'm looking for areas, most of which are kind of on the outskirts of the city and then over into the county line.
Hey investors, Dave Hathaway. Welcome back to the channel. We discuss real estate investing and building wealth. Today, I wanted to bring a video to you in regards of the best areas to invest in Baltimore. This is a question that I get asked frequently as I'm an investor in Baltimore, but I didn't want to answer it just by myself. I wanted to bring on two people that I trust, that I have done business with. They have sizable portfolios in Baltimore, so they have a pulse on the market, and it brings you kind of a different viewpoint for investing because they invest slightly different than I do. They have different views on different areas. So I wanted to bring on Matt Derby and Brad Cogswell. Matt has a background in mortgage before diving deep into owning a huge portfolio, and Brad has a background in tech and has built a portfolio over how many years, Brad?
About 4 or 5 years in Baltimore.
Nice. Before we get into the juicy parts, the zip codes, the up and coming areas, I just want to go general first, a little bit more mindset-esque. And I'm going to just throw one right to you, Matt. Why do you invest in Baltimore?
Well, I mean, I guess at the most simplistic level is because I live relatively close to the city. You know, at one point I did live in the city. 99% of investors typically start in their own backyard because it's, you know, you want to be hands-on with it. You want to be able to see the houses with your own two eyes. It's just a little bit more tangible. So I spoke to Mark Owens, who I know we both know. I'm sure a lot of listeners know, and he has said not only to me individually, but you're not really going to beat the cash flow that you're going to get in Baltimore in the vast majority of the rest of the U.S. So that was also a selling point to me as well. You know, I'm local and there's great cash flow. Okay. You know, you kind of had me sold with those two things.
And then Brad.
Yeah, mine's a little different. I before tech, I was working over at Wells Fargo, underwriting large multifamily industrial developments. I was actually in California, and that was in 2009, 2010. And the lesson that I learned there is we were working through a lot of larger portfolios that had bet on appreciation rather than cash flow. And so as I turned the focus and said, okay, I want to start building my own portfolio eventually, California was kind of out of the question. And so I looked at a number of different markets that I thought that I could invest for cash flow. And Baltimore was one that I was looking at. Whether I was flying out to Baltimore or flying out to anywhere else in the country, I was still getting on a flight. So it didn't really matter. And at the time, I actually partnered with someone who was a big Section 8 investor. They wanted a conduit of Section 8 properties. They weren't in Baltimore. And so I kind of got my start doing some fee-based work for them while also building my portfolio in Baltimore.
And I'll answer the question as well. I ended up in Baltimore, and it gives me a kind of a different view than you guys in Baltimore, as I started investing down in North Carolina and then started investing in Woodbridge, Virginia, where I lived. And then I just followed the path of progress up to Baltimore, invested in PG County. And each time I invested in the area, the properties would appreciate. They'd get really expensive for the area. And so then I ended up in Baltimore, which I'd come a couple times and been like, wow, this is a lot of bombed out buildings, a lot of craziness. But the cash flow, like Matt had said, was there. And the geography between New York and DC was just really good. That was a big selling point for me, where I was like, man, you can drive up to New York, you can go down to DC, so you have those salaries of those jobs. But then price point was just huge. Price point, I mean, still price point is super low compared to surrounding areas. What are the biggest challenges you see for yourself and for investors? And I'll throw this one to Matt again.
I mean, again, being very simplistic with it, the biggest challenge is just tenants not paying. I mean, outside of a lawsuit, I always tell people that the biggest, and that's why the Section 8 model was appealing to me, is because, like I was just saying there, outside of somebody slapping you with a lawsuit, a tenant not paying is your biggest risk that you run when being a landlord. So, again, I would say that that's probably a pretty obvious one, but that's really the biggest challenge that you're going to potentially have.
And Brad?
Yeah, I think I'll answer a little differently. I mean, obviously, tenants paying is a challenge for any landlord. So that makes a ton of sense. I think for me, as a transplant to Baltimore, moving out in 2019, kind of the topic of this discussion of understanding the different areas of where to invest and where not to invest, and trying to wrap my head around a block by block definition of what may be good or where we want to stay away from was a big challenge when we started out. We made a bunch of mistakes in a number of different areas, and in kind of finding out who we are as investors over the last 4 or 5 years. Part of that was figuring out, our strategy around understanding all these different areas and neighborhoods within the city.
Yeah, that's an awesome answer. And I know you mentioned mistakes, and it's often nice when we make mistakes, but we still make money because we're carried up by the market, which is nice. I guess it would probably be beneficial. What is your buying strategy? What's your strategy right now, Brad?
Yeah, so from a buying strategy, we flip and we rent. We have rentals. So for flipping, we typically stay within the first time home buyer realm. And so typically right now in Baltimore, a lot of times that's kind of 200 to, let's say, 275 for like a townhome, depending on kind of what area you're in Baltimore. And so that's where we stay. We found that we've done really well there. It's more formulaic. We've tried higher end flips, and we just found that was difficult. You have maybe a choosier buyer that's looking at different types of finishes, as opposed to someone who's doing kind of the rent versus mortgage debate. And so within the city, we will go anywhere as long as we're kind of fitting within that price point, and we feel like it's an area that has solid demand and it's an area that's safe. We don't want to go in places where I would feel unsafe to walk through a house, or where I feel like my contractors would. From a rental perspective, we look for a little more homogeneity, and we invest primarily now. We did have some rentals in the city, but we invest primarily now in the county, in townhomes in the county, because we found that it was a little more easier to manage at scale in one certain area with where it wasn't as block by block.
That makes total sense. For Matt, that same question, I want to caveat it. I saw you put out a post a while ago, and it was super impressive. You put out your buy box, and I guess I shouldn't be impressed at this point because I know you, but it was like the most specific buy box I've ever seen. It was like 10 different zip codes. It was like, this is exactly the price point I'm looking for, these zip codes, these areas, this breakdown of the house. What are you looking for right now?
Yeah, so from a location standpoint, I'm kind of looking at, I'm not buying in the worst areas, and I'm not buying in the best areas, which, to kind of echo what Brad said, I think that's, especially in Baltimore, is certainly a challenge to somebody that's just not familiar with the lay of the land. You know, you can go and you can find properties that on paper will pencil out and look phenomenal from especially a cash flow standpoint. But if you're not familiar with that, you're going to run into a lot of challenges. You know, unfortunately, Baltimore does have some issues between, you know, I won't get into all of them, but crime, drugs, you know, the list kind of goes on. So, and obviously tenants are not, especially good tenants, are not really going to want to be habitating in areas where that's going on right outside of their front door. So I'm kind of looking for areas that are kind of right in the middle. I'm not looking for your A or even B or B plus areas. Maybe I guess you can consider some of them like a B minus area, but I'm looking for areas, most of which are kind of on the outskirts of the city and then over into the county line, where I do think the tenants are going to want to stay for a relatively long time. They're going to feel safe and comfortable living there, happy living there. We're going to feel comfortable. Again, Brad touched on this a little bit. We're going to feel comfortable with our contractors, with our property managers, myself going into these neighborhoods, going into these properties. And so that's really kind of it. You know, again, we're looking for the right location because, again, location in real estate certainly does matter. And if we kind of check the box off of the location being acceptable or good, then the only other thing that we kind of really look for is cash flow. And if there's certain zip codes that I didn't really kind of buy into it at first as kind of a farm area, but I do think that's why my criteria is so tight. And Brad, you know, at least from a rental standpoint, he's investing very specifically in one area because I think it just allows you to move a lot quicker in many shapes and form. You know, when I see a house pop up in a buying area of mine, I pretty much can do the math in my head in 30 seconds. You know, my guys are already working in those areas, you know, and I know what to look for, in a positive way and a negative way. You know, there's one zip code, for example, that I probably own the majority of our properties in, but there's a few streets and blocks in that zip code that I would not touch with a 10-foot pole. There's just, you know, I just will there's a little cutout in that zip code where I know that those problems that I mentioned earlier are running pretty rampant and probably are not going to be turning around here in the next couple months or even couple years. So, you know, again, it's kind of location and cash flow is really, and I also, you know, you go into these areas. I do, again, agree with Brad a lot. You know, I'm not really buying for appreciation, but I do think that true wealth is built in real estate with equity and appreciation. You know, you can be very comfortable with cash flow. Cash flow is hands down the most important thing to look at. And if you don't have cash flow, you can have all the appreciation in the world and you could be in a very tough spot. But it also is nice to own a house for 5 or 10 years and say, okay, the house has appreciated 30, 40, 50% in that time range as well. So it's something that I kind of keep in the back of my mind.
It's almost like cash flow pays the bills, appreciation creates wealth, something like that.
Yeah, I would certainly agree with that.
And I'll pitch in here at the end. I've always had this random number of like $500. I like the properties that cash flow $500, whether it's just a higher down payment. For some reason, that has always stuck with me. And whether it doesn't always have to be 500, sometimes 400, sometimes properties cash flow for more than that. But I continue to look at cash flow almost to a fault. But I've definitely found that the appreciation of properties has definitely generated the majority of wealth for us. Properties that are in decent areas that have appreciated $100,000, $200,000. It's nice when you sell those properties. Not only did you collect the cash flow the entire time, but now you have this $100,000, $200,000 check that you get. And definitely Baltimore is block by block. I definitely like that you guys both said, hey, you got to be careful of the area, sometimes you can have a great area and you can have one street that's just terrible. And so it is localized. It's super important to have that localized team. Are there any areas, and I'll field this one to you, Brad, are there any like up and coming promising areas, and it can be county, city, that you're like, hey, I really like what's going on in this area? Anything that you see that you're like, this is super promising, up and coming area?
Yeah, I mean, when I moved out here, I moved into an area called Highlandtown. So you're kind of next to Canton, near Fells Point, like a nicer area. Definitely, I would say kind of a 20s to 40s kind of area, but some families too. And what I've seen is the development has continued to move east from Canton through Highlandtown and Brewers Hill. And so, one of the investments that I made personally is I bought a 3-unit building that I live in. I rent the other 2 units out, and that's in Highlandtown. If you drew kind of let's say a half-mile radius around my house now, there's probably 200 to 300 at least, maybe 500 new apartment units that have gone up over the last 1-2 years, and I think that's increasing. There's a ton of old warehouse space in Brewers Hill, over down in the south of Canton, and so that I'm excited to be in that area because I'm seeing the development come up around me, and so that's one area. We know a number of guys that invest kind of in the Highlandtown, Brewers area, and I think those guys have benefited from both cash flow and a lot of appreciation the last couple of years.
Love that. Matt, same question to you. Any promising developments or areas that you're like, hey, I really dig in this area?
To be frank and truthful, not
I
really.
wouldn't expect anything different. I wouldn't expect anything different here.
Well, I'm not an investor there, but I do think that there's the hype about Pigtown is, Pigtown has gone from a pretty rough area where you could buy houses for $20,000 and $30,000, and now, and we could say this about so many areas. Brad knows all too well about the Dundalk and Essex areas. The prices have really popped in a lot of those areas. I think for me, the reason why I don't maybe fully buy into that in terms of Baltimore is that we've heard that narrative about a lot of neighborhoods, and we just simply have not seen it come true. So we've heard that area about the area around Hopkins Hospital. We've heard that area about even Sandtown. We've heard that about a lot of areas, that the area over by Coppin State, and that's not to say that there's not some money and some good things that are going into some of those areas, not all of them.
Matt, can I pause you for just a second? Are you talking about the narrative of like there's money pouring in this area and this is going to be the next area in Baltimore? Is that the narrative you're talking about? Just so.
Yeah. Westport, down just outside of the city. We hear, there's $100 million, $500 million. Well, okay. I mean, I'm as nice as it is to buy the stock when it's trading for $1 and see it ramp up to $50 a share. It also is not really a lot of fun to buy a lot of stock at $1 and have it go down to a penny as well.
And sit on it.
So again, I just feel like I've heard again that narrative, that hype about a lot of areas, and it just really hasn't come true. So I think I just really kind of take that stuff with a grain of salt.
And I'll pitch in on the back end. The two areas that I kind of see developments that I'm eyeing, or I'm like, man, this could blow up, is I see the Maryland biotech area that they keep building buildings over there, and I could see it becoming a good area. Again, it backs up to some rough areas. You got to take the change where it is, and there are some fringe areas there, but that like Holland's Market area, I think that area is decent. And I'm with you on the Pigtown. When I first started investing in Baltimore, the two areas that I heard were like, these are the up and coming areas where Hopkins, like anywhere around Hopkins is what I was told. Anywhere you buy anywhere around Hopkins is going to purchase up the land. Your property's going to go up in value. The other one I heard was the Pigtown is the next up and coming area, which is like, I think the line there is it's been up and coming since like 1800s. Right. And I actually drove through there the other day, like 4 months ago. When I say the other day, but I was like, man, I'm going to go check out one of the, maybe it was more than that, maybe it was 6 months. And I was like, I'm going to go check out some of these properties because I do think there's so much so close to it, because I'm actually a proximity investor, and drove through there and it was just like tons of drug addicts walking the streets. And I was like, you can't purchase a house like that if you're from Baltimore, or you have a bunch of properties in Baltimore. You realize if there's drug addicts just constantly walking up and down the street, you see it, but also your prospective tenant, if you're going to be a landlord, is going to see it. They're just going to say, nope, I'm not living here. I'm not going to raise my kids here, and I'm not living here. But
what is your buy box, David? Because we answered, and I'm actually not sure kind of how you look at Baltimore from not being in the city.
My buy box has changed a decent amount, but I look for bigger properties. So I look for 4 bedrooms plus, so usually 4 2s and plus, mainly in the city, even though I've become like super specific where I purchase in the city. I like areas like Oliver, and I still do like areas like Harlem, but I am super specific on like block by block with bigger properties because they rent for more through Section 8 or just through. I almost say my buy box is more like a vacation property model where I don't have to fight for a 2-bedroom or a 3-bedroom, but often if I get a 4-bedroom or a 5-bedroom, there's only so many in the city, so I command a higher rent, but I also command a property that just is not a commodity. And then in specific areas throughout the city. But I have been scaling back a little bit on Baltimore. I've sold a bunch of properties over the last year and a half. I've invested probably say a quarter of our capital into syndications in diversified areas. But I think one of the biggest challenges with Baltimore is that we didn't discuss is taxes. I think taxes are like almost counterintuitive in Baltimore, but the city raises taxes and then it inadvertently affects property values. So like they'll just continue to raise taxes and property values can't go up because it just is factored into your expenses. And again, I am a majority value add investor that looks for cash flow. That semi answer your question?
Yeah. I know you've bought. I've seen some of your larger buildings, but I didn't know how you looked at specific areas, or if you did look at specific areas. So it's interesting.
Yeah, and usually I'm on fringe. So when Matt said he's on fringe, I'm probably on a little bit more fringe than Matt. But again, I'm a proximity investor. So the way I look at it is I look at distance to major economic drivers. That's why I'd probably be okay with Pigtown in certain areas just because it's so close to some amazing economic drivers. Just like Harlem Park, I'm okay with areas of Harlem Park because it's so close to certain areas in Baltimore that are really amazing. You just have to walk, 6-7 blocks and you're there at, the orchestra in downtown areas that are super nice. So I guess that I'd say that is probably the majority of my buy is just proximity to strong economic drivers in Baltimore. I'm going to go with this question, which is areas that, and I think this will be a fun one, areas that you absolutely wouldn't touch with a 10-foot pole. And I'll throw that one out to Matt. He'll probably just say all the areas that I invest in.
Those fringe areas.
Well, yeah, I mean, again, it's you can get very, very granular with this. We'll probably say block by block 17 times on this this call, but as I mentioned already, there's a few blocks in a zip code that I buy very, very heavily in that, again, I won't touch. I won't even look at the property online, let alone certainly drive out there and look at it.
I mean, what sticks out when I say that, where I'm like, hey, where would you just be like, absolutely not. You can't even give me a house for free. And it could be that block that you're talking about. That's what I'm looking for.
Well, I mean, I'm not talking about in terms of, there's, first of all, to go by zip code, I really stay away from 21223, which is kind of on the southwest side of the city. One of the worst neighborhoods that I know of. I don't have intimate knowledge of it because I've been told from day one to stay away from it, but is Mill Hill, the Mill Hill neighborhood, areas that are around there. I remember actually earlier on in 21223, I don't know whether I had a property under contract that I was trying to assign, but I drove through that area and I was blown away. I mean, I guess I grew up in a better area, but seeing houses, and when I say houses, like seeing anything really boarded up was not very familiar to me. And I remember it like it was yesterday. I drove through these areas, and I mean, you're talking, it looked like a movie scene. I mean, it looked almost third world. There was whole blocks of just, houses. I mean, you guys have certainly seen them where the roofs have fallen in, everything's boarded up. It's just, it's a dead zone. There's like no signs of any productive life going on.
The word I like to use is desolate. It's very desolate in areas of Mill Hill.
Literally, you think of like the show The Walking Dead. It's like this just looks like it was abandoned 30, 40 years ago and nobody's come back for it. So generally speaking, I mean, I don't, as a lot of investors, I don't like buying with a lot of board ups. I really don't like buying with pretty much any board up. I mean, I will make an exception to that. But I don't want to walk myself or a tenant walk out the front door of the house and, look across the other side of the street and see 3 or 4 houses boarded up. I certainly don't want to buy with a boarded up house adjoining with mine because we don't know when the boards are going to come off and, what the status of the roof is. You run into a lot of potential nightmares if you're buying a house where, you could buy the house and the house next door, the roof could cave in 3 weeks after you buy it. But yeah, again, really for a lot of the board ups to me are, for me.
Any other zip codes or neighborhoods that just come to mind?
Yeah, I would say which I'm a pretty big buyer in 21218, but like the Midway area, North Avenue's North Avenue. I think I don't invest there, so I can't say that I have tracked it a lot, but that was another. I mean, I drove down North Avenue 5 years ago, and I was like, same thing. I was like, wow. I mean, you have Micah there in kind of the nicer part, but when you start getting up towards the cemetery there, it was again desolate to use your word. Midway, which is pretty much kind of right off of North Avenue in 21218.
Is Midway right next to Carrollton Park for context?
Somewhat close. Yeah. I mean, and then also again, to give you, I guess, a better example of where I actually do invest heavily, but I stay away from certain pockets in that area, which I know you're familiar with, David, is really anything that's on or very close to Bel Air Road.
Gotcha.
I know you've owned some units, some commercial units there. It sounds like a joke, but it's not. I mean, you see drug dealing going on plain as day. You see police officers pretty much sitting back watching guys deal drugs right in front of their face.
And you're talking about Bel Air Road in the corridor of Bel Air Edison coming down or going up from North Avenue, just because Bel Air Road is pretty big.
Yeah. I mean, exactly. Once you hit that turn at the dead end at the cemetery, really almost all the way up to pretty much the county. I just, I don't really love buying on super, super busy streets. And that obviously is a very, very busy street. But yeah, I mean, we probably own roughly 75 units in Bel Air Edison. But if somebody sends me a quote unquote smoking hot deal at a great price and it's a half block off of Bel Air Road, I'm likely going to say no. I mean, again, not to also get too granular with it, but a lot of those houses are typically the oldest ones because a lot of the developments started on Bel Air Road and branched out from there. So a lot of the houses that are very close or on Bel Air Road are the oldest, which means they have the oldest infrastructure. They typically have a ton of lead paint going on. But also, even that aside, even if I don't feel like that's necessarily the case, there's not a lot of good things that go on Bel Air Road from my perspective.
No, that's. I mean, you're not wrong. One altering perspective that's interesting. This is why I want to have this conversation between us three. Is often when I think of like a main road, and I 100% agree with you on Bel Air Road. I mean, it is rough. On like areas like North Avenue and these really main corridors, often for some reason, and I could be wrong, but I feel like there's less of a chance for break-in or crime because they are so visible. And it's one of the things that just sticks in my head. It's why I've purchased a couple properties on North Avenue in certain areas, and I haven't ever had any issues with them. I mean, I haven't had too many break-ins in general. I think I've only had one property broken into in the city because we use some systems and processes. But that's one of the things I think about when I'm purchasing on one of those major roads is, okay, I'm not going to have to worry about somebody trying to kick in the main door on North Avenue because there's so much traffic. Different perspective, doesn't necessarily mean that should be why you're purchasing a property in a certain area, but that just comes to my mind.
I think that's overly optimistic, by the way. For the record, there's a lot of things on North Avenue that can divert the attention of Baltimore's finest, and one of them breaking into a property is probably something that they could pretty easily get away with, but that's just my 2 cents.
I also think a huge thing, if you're looking at, man, I can't remember the website, but if you look at Baltimore City maps, the city map, and you can look where homeowners live compared to where non-homeowners live, you'll be able to find where a lot of crime happens compared to where it doesn't. And if there's a block with mostly homeowners, you usually can rely on that being like a semi-okay block compared to one that's rented out to a bunch of different people or has no homeowners on the block. At least that's in my experience. I love when I purchased a property and then the next door neighbor comes over and says, hey, I just want to make sure you're going to put in a good tenant. Here's my phone number. I love that. That's like my favorite thing because I know, okay, now I have an advocate. Now I have somebody that cares about the neighborhood. But yeah, Brad, same thing. What sticks out doesn't have to be huge. What sticks out in your mind? You're like, hey, I wouldn't have you pay me to have a property in these areas. Anything that comes to mind?
From experience now, I think one of the things that happens when you come into Baltimore, and it happened to us, is returns on paper do not equate to real life returns. And so we looked at several duplexes in Curtis Bay, which is right near Westport, and we bought, I think, 4 duplexes for about $50,000 each in relative turnkey condition. So you're thinking, okay, let's say $1,600 total in rent for a duplex that we're buying for $50K each. Like those are pretty good numbers, and we were pretty excited. And I think what we found, if we looked at the percentage of that to our percentage of our larger portfolio, the time spent on managing those 4 duplexes versus the entirety of the rest of our portfolio was so disproportionate, and it was so time consuming. We were probably spending 50 to 60% of kind of management time around those 4 units and following up with tenants and tenants not paying, that it just became not worth the time on our end to manage the returns that we were getting. And so we were luckily, you mentioned before, we were kind of saved by the market coming up, and we ended up doing pretty well on those. But if you were to say, hey, do you want to get into Curtis Bay or Westport or those areas again, you couldn't pay me to manage those units again.
Do you consider Curtis Bay as Brooklyn? Are they as one or no?
No. Well, again, there's areas in Brooklyn that are nice, and that would fit a buy box. So I think that there's definitely some overlap. What we saw was a lot of on the blocks that we own, which is kind of it was Fairhaven Ave. So I think there were four duplexes on that. It definitely shares some similarities with Brooklyn, with prostitution and drug use and stuff like that. I never felt necessarily unsafe in that area, but you could always tell that there was stuff going on all the time.
Yeah, I was wondering what Matt was talking about earlier when he was saying Mill Hill. He doesn't have intimate knowledge with the neighborhood, but I'm assuming you meant you don't have any properties purchased in that neighborhood.
Yeah, I was so spooked out that I never ventured into that area.
The other one that sticks out, and I don't know the zip code, but 4x4 is always one that gets talked about, because if you go through 4x4, the houses actually look relatively nice, but I know it's a very dangerous or can be a dangerous area.
I mean, it's right by that in the 4x4, because most people are not going to know what that is. Matt, do you know what the zip code is? I don't even know what the neighborhood is actually called, other than we call it the 4x4. It's right next to Bel Air and North Avenue, and it looks like a little grid pattern in Google Maps. If you look there, I've never purchased a property there just because it's so close to that.
I've seen new investors get kind of buy there thinking it's the same as that. Yeah, thinking it's the same as everything else, and those are difficult proproperties to
welcome to Baltimore. That's where they get their training wheels put on.
Brad, 4x4 is 21213. Again, I mean, another prime example of, we buy Bel Air Edison is literally right across Edison Highway from 4x4. But yeah, I have been in 4x4. I did own a unit there for a few years. We did okay with it. I did end up selling it because of it's kind of a long story, but the short of it is that a seller wanted to sell a couple properties and I wanted the other ones, and he basically said it's all or nothing. So I did end up taking it, and I actually ended up selling it and made a pretty healthy profit on it. So I guess all's well that ends well, but not an area. I do remember also I met a longtime contractor. He was working on houses in 4x4, and I had been, I guess, educated or told kind of, that 4x4 is not a good area. And I ended up meeting him at a property that he was working on, and I did get out unscathed. But man, I got out of my car, and I didn't see anything that was like suspicious. But I just remember walking from my car into this house, and then out of the house back into my car, and I was like, being dramatic about it, but I felt like I was walking across like a war field, and like, I might get taken out or something. It was definitely not a warm and fuzzy feeling, I guess.
I feel like that's a great lesson. I've invested in areas. I've invested in 21217. We still have a few properties there. And when I was told early on from an investor that had a lot more properties than I did at the time, that I was an idiot And I was like, man, I just purchased this 3 property multi-unit portfolio for cheap, and the area seemed okay to me, not being from Baltimore. But then I was like, man, I am a dum-dum, and I really kicked myself really hard. Those properties have been super lucrative for me, and I've just recently sold 2 of the duplexes, but we just made a killing. So I also want people to realize that even in certain zip codes, the price can be right. You can make money just often. And I want to go back, because what Brad was talking about was really powerful, about how those units were spending the majority amount of your time in proportionate to your portfolio. And I've noticed that, and I've sold properties that we've had where I'm just like, man, the tenant quality is terrible, or something. You get so many more maintenance calls, even though these buildings are fine, because it's either the tenant, something's going on. I think that you can purchase in those areas, but do realize that you will have a hefty amount of management. So if you're managing yourself, you're going to spend a lot more time, or you could spend that time on just looking for more properties and finding better deals. And why would you want to spend a ton of time and easing out cash flow on properties that are really like tough to deal with? You can't scale it. So you can only do so many of those. I'll answer this question as well to chime in, but areas that pop in my mind like immediately are like right around Penn North, right around like where North Avenue hits Cullah, Druid Hill, right where where Penn North metro station is. It is terrible. I wouldn't buy in 6-7 blocks in all directions from right there. It is a hub of nastiness. I think of Shipley Hill, Sandtown. I think of Middle East. The first property I purchased in Baltimore was in Middle East, because Hopkins, buy anywhere where Hopkins is. And I purchased 706 North Streeper, I want to say. And the block was fine. It had homeowners on the block. But to get to that block, to get to the fine block, you have to drive through the worst of the worst of the worst. You have to drive in Monument. I think it's Monument Avenue. Is that what it is?
I'm not sure, but I know I've had those properties where like you think you're in a good spot, and then to get there, it's depressing. It can be depressing driving through this.
You can even have a good block, but if in order to get to that good block, you have to pass the drug dealers and the crime and the board ups, because there's a bunch of one ways. It's just how Baltimore is. You're going to have tenants that see the exact same thing, that have the exact same feeling that you do. And so I sold that property after 2 years. We made money off of it, but it was just not great. Tenants didn't want to be there. So it was short turnover. I think we had 2 tenants in the 2 years that we had it. So the 1-year tenancies, and they just didn't want to be there once they got there. And I think Middle East, Sandtown, Penn North, Brooklyn also comes to mind, areas in Brooklyn. I might venture, I've always thought about investing in Westport. So I know you guys get, but not in like the outskirts, really close to the casino, on the main road, not in the neighborhood of Westport, that it feels not comfortable to drive in there, because you're getting eyed by guys that know you're not there for the right. You're not there to buy drugs, to buy prostitutes.
The trouble to me with Westport is you've got to be willing to sit for a long time. Like you're making a bet on the development of that area, which, you know, there's constant kind of news about the development of Westport and that industrial area. But to me, as I look at it, I'm like, okay, am I wanting to bet on the development of that area, which you know has been tough to get to fruition, or do I want to put that money in other places? And I think for me, with the limited amount of kind of where I want to put money, that's been a tough one to make the bet on.
Yeah, I mean, there's another really good learning lesson there. I know we've touched upon it, but we haven't actually fleshed it out. Matt mentioned earlier on the call about you've seen these big news articles, the narrative, 500 million, 30 million put in different areas. One of my personal kind of philosophies is don't invest based upon like the news lines. Invest when the shovels are in the ground. And once you actually see development going up, you see like a new construction building, okay, it's real. But if it's not, that thing can be shut down at any time, and that developer can back right out whenever they want. once they actually start developing the land, that means they're committed. They're committed on a bigger thing than if they just have maybe purchased the land and then sell it off again, it ends up being vacant. I've seen this in Northern Virginia where, like, even anywhere you've purchased in Northern Virginia, you've been lucky. Properties have appreciated a ton. But I've seen like malls that have been slated to go in, and like they're huge strip malls, and then they'll change and they'll go, hey, we decided to change our plan. We're just going to put in single family houses. So now there's just tons of single families. All these people thought they were going to get a movie theater and a bar with a bowling alley, and now they just get a bunch of single family houses and they got to drive. And that was something that happened recently out in Aldi, Virginia, that I remember. And I'm just like, man, you just got to wait until the shovel goes in the ground. You can't just buy off of all these like renderings of an awesome looking, strip.
Look where the cranes are.
Yep, look where the cranes are. Up and coming areas. This is going to be the juice. This is the juice. And I'm going to throw this one to you, Matt, first. Best areas in Baltimore to invest in, highest returns that you think are going to appreciate the most right now.
I guess one area that comes to mind is the area around Morgan. That really, the rents have been going up, the values have been going up. It seems like there has been, if you do drive around Morgan, there are cranes and shovels in the ground. Truthfully, I don't know whether that's the university that's doing that or just a land developer or both, but that's an area that I invest in relatively heavily. You have Morgan there, you've got relatively close access to downtown, but you also have you're also pretty close to Parkville and you're getting over the county line as well. So that's one that kind of pops out to me. But it's all, we've kind of already driven this point home, but it's all kind of relative. I mean, in terms of there's risk and there's reward. And you can buy in a terrible area and cash flow like crazy. Kind of the law of averages are going to work themselves out. You're not going to do that more times than not. You're not going to buy in bad areas and cash flow like crazy, but you are typically going to cash flow higher, but you're going to deal with turnover, tenants not paying more. So that's a very subjective question to me. But again, I guess my one answer there would be that kind of pocket Northwood around Morgan.
Yeah, I like that. There's a new mall that they put a Chipotle in, and if you like investing around Chipotles, then you'll invest right there. That is not a mall owned by the university, but it's right there in between. I can't think of the neighborhood, but it's lower after North Avenue, but before you hit Morgan State University, if you know what I'm talking about. But it's a mall that they redeveloped, and they put in some really nice places there. Nice, Brad. If you got anything to add on best areas to invest in Baltimore or areas you think that you'll get your best ROE, return on equity, return on investment?
Yeah, I mean, I think, again, I mentioned like the Highlandtown all the way east through Greektown and through Bayview. There's just a ton of development through there. And so I think all of those areas are going to benefit from not only all the new apartment work that's going up, but all the investments that Johns Hopkins doing, and then is it Yard 56 that's across from Bayview. So there's a ton going on there. The other one I think that's interesting is the area known as Old Goucher. So you're basically south of like Charles Village and kind of north of Penn Station and Station North. There's a ton of kind of interesting restaurants, art studios, development going on there, and I think that those areas are going to kind of converge. You have Charles Village and then Station North, and kind of the middle is that Old Goucher area, and I think that there's a ton of interesting things that are going on over there.
Would you say, is Old Goucher even considered going up to like Belvedere Square?
Let's see. I got to look where Belvedere Square is.
Belvedere Square is right, but I think Belvedere Square is more north, but it's when you hit the Parkway.
Yeah, so it's basically like, Oak Goucher extends into Charles Village, but you're still south of Johns Hopkins, the actual university, and so you're directly north of there's like the Guilford Hall Brewery, and directly north of Penn Station, right off
Gotcha.
of.
I know exactly what you're talking about.
Yeah.
I'll add to that. I think some interesting areas that, again, they're block by block, but I think Waverly and Penn Lucy, I think you're tucked in between that university corridor. We've done well in Penn Lucy with our properties. They've appreciated really well. But all those universities pull. I used to call it it's where I started investing in Baltimore. I was like, oh, this is like University Triangle, because you have Hopkins, you have Loyola, you have Morgan State, and I think you have some like other college in there too, maybe like a Catholic priest. This is really just like densely populated. So you have all these economic drivers right there. And a lot of people, when you say like Penn Lucy, they'll be like, oh, Penn Lucy. But you're just so close to all those things. You're like walking distance to Loyola, which is a really nice college. And then it's also got, I think Gilman is higher up. Gilman might be in Roland Park, nicer area. But you have all these like nice things going on over there.
I also think what's interesting, like about Penn Lucy, is Penn Lucy has been an area that you could buy a little bit cheaper, but we flipped in Penn Lucy, and you could achieve higher ARVs that are driven by the surrounding area outside. And so we've done well in Penn Lucy before, and I think actually Matt and I did a deal in Penn Lucy too.
I mean, you have across Greenmont Avenue that you have properties that are just ridiculously expensive. Greenmont basically goes straight up and down, and on the left side you got properties that are 600, 700, 800,000. On the right side you have like 80, 90, 150. And often I have found, in my experience in real estate investing, when you have two areas that butted up to each other like that, it's opportunity. And more often than not, the lower end of the spectrum is going to be carried up, and not necessarily the higher carried down, but that lower end, which in essence is Penn Lucy, gets bumped up and appreciates.
Yep.
What do you guys think of like the Overly area, which is close to Morgan State? I want to say, is Overly the area that's close to Morgan State, but across, is there a river there? Close to Bel Air Edison, butts up to Bel Air Edison.
I don't know about a river that's there, but a creek.
I see it on Google Maps, but I don't think I've seen it in person.
Yeah,
for me, the vast majority of my properties are northeast side of the city and the county. So I'm big into. I love it. I'm a fan.
Lauraville, those areas. I like those areas. I think those areas can appreciate a lot. There's some like really nice areas in Lauraville that you can. I feel like you can still find some pretty good single family if you're looking to do like a single family property, whether a flip or whether a long-term hold. You can still find cash flow if you look for value add properties in those areas. I did notice, and I thought this would be fun. So Google, when I type in Google, redevelopment and innovation, comes for Baltimore, like best areas for redevelopment and innovation. It comes up with Station North, Westport, Cherry Hill, and Inner Harbor. How do you guys feel about Cherry Hill?
Cherry Hill's near Brooklyn and
correct. It's right by I actually like Cherry Hill. It still has crime, but it has a good feel to me. It's near the huge MedStar Hospital, right across from I think it is a great location. It's sandwiched in between like Glen Burnie. I think it's super underrated. Properties ARVs are super low, but I often think when you have a bunch of low ARV properties, because most of them are small, most of them are 2-1 townhouses, which I don't love, and I don't like to purchase 2-1 knowing my buy box. But I do like that area just as far as proximity location to down to the airport, down to other areas going down south. How do you guys like it? Do you guys hate it? Do you think I'm an idiot?
I don't know enough about Cherry Hill in particular. I know I've never done work there. Looking that it's near Westport and that area. I've mentioned I'm not a fan of. I think one of the things that I look at is because I'm concentrated in other areas that are, kind of up north and east, it's more difficult to look at properties in an area like Cherry Hill, because then I've got to send contractors back and forth if I've got multiple projects going on at one time. And so Cherry Hill hasn't even entered something that I've looked at for just ease of managing people all in one location, as opposed to sending them, southwest and then up northeast.
Yeah. Matt, thoughts, Cherry Hill?
Yeah, I mean, Cherry Hill, you just kind of named off the typical culprits in terms of these people that have been touting this development for a long time, and we just haven't seen it. I never really kind of got acclimated with the Brooklyn and surrounding areas. So again, to reuse the term, I don't really have intimate knowledge of the area.
That's how I know it's going to be a good area, because you guys are just throwing it in there with Brooklyn and Curtis Bay. And it's got a really cool name. I mean, I would be okay with like, hey, I'm from Cherry Hill. It sounds ritzy.
I'm neutral on Cherry. I'm neutral on Cherry. I don't know anything about it.
There's Cherry Hill, New Jersey, which is certainly better than Cherry Hill, Maryland.
I mean, it's just funny because it's not great for flips because the ARVs are so depressed. But as far as if you actually drive through the neighborhoods, it's not like inner city Baltimore. So it's interesting. I've always thought about starting a portion of portfolio. And to your effect, Brad, one interesting thing and one reason why I shotgunned, and this was just early on, I did it intentionally. I shotgunned my portfolio in all sorts of areas, in Bel Air, Edison, over in Penn Lucy, down in Harlem Park, over in Oliver. I did it actually on purpose. I get excited when I purchase in a new area because it forces me to drive around to the different areas. And then I go, man, I really like this area. It's turning. It allows me to kind of have a different perspective. I'm also not from Baltimore, so I don't have any of those stigmas of certain areas. I just come in with a police background, and I just go, ooh, I definitely don't want to purchase anything in this area. But I've always thought of it as an advantage because I don't have those like stigmas from being from Baltimore or certain areas.
Well, one of our greatest assets is, I think when you're starting in new areas, as we were, I think the advice that everybody says is, find an agent because they can help you get deals. And I found for the first several years that advice to be pretty poor because the majority of agents, in my experience, are not great investors, and they don't understand kind of the market. They don't understand how we're looking at deals. And I was finding better off-market opportunities than any agent could be. But I will say I partnered with, and I'll give him a shout out because I think he's incredible. Eric Clash, who's become a good friend of mine, and he has become my eyes and ears in areas that I'm not familiar with. So if I get sent a deal that I'm taking a look at and I do kind of an initial pass, Eric is my next text to say, hey, what do you think? And if he says no, I don't even look at it. Like that's it. If he says yes, then we continue. And so for someone who's not from Baltimore, that's been a huge asset to help understand certain areas that I've either never been to or I don't understand specific blocks. Or he'll say, hey, you're near this, corner store, which is a bad place to be. He has been a huge asset for our businesses as we've continued to scale.
I love that. I love that as a check and balance, especially for people that are not from the area or don't, I've also found there's a big difference when you drive places in really cold days, when it's raining. You got to be careful on the elements because everybody's not going to be out there if it's raining or if it's super cold. And then you could go through and purchase something in December. And all of a sudden, when it's 80 degrees, you go, holy smokes, this is a completely different area. What the heck? There's drug dealers all over the place. So you also have to be a little bit cautious in Baltimore, what days you go on.
Or check it out between 4 and 6 p.m.
Yeah, I mean, there's those factors that I've noticed that I'm cautious when if I go look at this block that I've never looked at before and it's super cold sometimes I have to call somebody else and say, hey, can you stop by this block? What do you think about this block? But that check and balance is awesome. I really love that. We'll round out with predictions and then get your guys' contacts. But predictions in the next like 10 years, Matt, of rents, of prices. Where do you think Baltimore goes in 10 years? Do you think it becomes the most desirable city in the U.S.?
I think it's already there. That's why Brad was wooed here from lovely California.
Oh, love it. Yeah.
He
Full
said,
circle. Silicon Valley.
this is Palo Alto is now second to Canton.
The Palo Alto of the East.
Yeah, exactly. I guess my answer there is kind of, I don't know. I just, pricing and rents are becoming so high. And obviously we know what rates are doing, for us to be receiving $2,200 for rent for a row home in Bel Air Edison is kind of beyond crazy to me. I don't understand, I guess, exactly how we got to this point. I certainly don't understand how we go up from here. I also don't understand, using Bel Air Edison as kind of the guinea pig. I don't understand how houses are selling for $250,000 in Bel Air Edison. And that's recent, that's not back when rates were 3.5%, 3%. That's happened in the last 6 months. So, it is a little bit hard for me to wrap my brain around how we got to where we're at, let alone that same house potentially selling for $300,000 18 months from now. At the end of the day, you're buying a house that has, at best, was probably built in the 50s. You're buying a house with infrastructure that's 70, 75, 80 years old. Quite frankly, I don't know whether that's really a sound investment. That those numbers just sound outrageously high to me. And I know, of course, we're in a post-COVID world. Pricing on everything has shot through the roof. But it's, I think you kind of understand where I'm going with this. It's very, very hard for me to sit down and say, yeah, I think that row home in Bel Air Edison might sell for $400,000 in 2030 or 2035. I guess anything's possible, but I do think that I'm certainly far from a doomsdayer in terms of housing. I don't think that we're going to see this crazy crash, but I also don't think that we're going to follow this trajectory that we had these last few years where housing is up 30, 40, in some cases 50%. Rents are up 20, 30, 40%. I think that at some point you've just got to hit a ceiling on that. We know that wages are not going up even remotely close to the trajectory that we've seen that these pricing and these rents go up at. So I guess to kind of come to a conclusion here is I think we do see some leveling off, because I just don't know how we're going to see things get much higher and it be even feasible for people to afford some of this stuff.
Sounds like you are slightly pessimistic, maybe, but flat, but kind of flat. You think flat values flat?
Well, hey, that's not to say that I think, usually housing, typically, I think what people would tell you will go up, let's say 2, 3, 4% annually. And we've certainly seen more than that. It's ebbs and flows, but we've certainly seen a lot more than 2 to 3% appreciation over the last since COVID, we'll say. I think that there's still a possibility to see some more normal growth, but I don't think that we're going to be sitting here in 2028 and saying, wow, that house is now selling for $100,000 more than what it was in 2020. 4 years ago from today is not going to be the same 4 years from now until 2028 is kind of what I'm saying.
Yeah. No, agreed. Brad, do you have a thought on where we're going to be in the next 10 years? And for
Yeah,
rents
not
and
on
values?
not on rents and values. I think that's very difficult. I think to look ahead 10 years. I mean, I think, as Matt said, if you look at, a trend, I think we see, small increases in rent growth. We see small increases in home prices that I think coincide with general trend over the last several decades at this point. But I don't see, I agree with Matt. I don't see the ridiculous 20 to 30% gains we have seen. Here's what I'll say about Baltimore. We wouldn't invest in Baltimore if we weren't bullish on Baltimore, and I do think that the proximity between New York and DC and the proximity to water and some of the investment that's coming into Baltimore, I all think bode favorably for continued investment from a not private equity perspective, but from an institutional capital perspective. And I think that bodes well for all of us and what we're doing. I think if you look at areas that are able to continue to grow, it's areas that receive institutional investment with shopping centers and with retail, with apartment complexes. I think Baltimore has a number of challenges politically that we need to solve. There's a lot of the areas that we've talked about today need that type of institutional investment so that they're not food deserts, and that there's things to they have access to groceries and different elements of entertainment within those neighborhoods. I think those are the things that Baltimore needs, but overall we're relatively bullish on Baltimore.
Gotcha. I appreciate that. My thoughts on Baltimore, and the stats show that the Baltimore metropolitan area is growing 1.6% with population growth. But when you separate out the county from the city has actually been shrinking for quite some time. So the county must be picking up all that growth. But Baltimore City, they are also demolishing 500 plus properties a year. And they do have so many challenges. When I look at some of the ownership of properties, it kind of blows my mind. I would venture to say, I think the stats show that Baltimore City owns I want to say 13 or 15% of their own housing inventory. But I think they own somewhere more like 25 to 30%. Looking at some of the stuff. And if you can look at ownership, if you click on buildings, click on blocks, and it will say owner, mayor of the city, or owner, Baltimore City Housing Department. And you start to click on these things, you're like, holy smokes, they own so much. But I think that, similar to what you guys said, I don't think rent's going to grow a ton. I get really worried for Baltimore, for the city in general, about just taxes in certain areas, that I think that hurts values. I think values kind of stay flat. I think rents kind of stay flat until maybe there's some political changes and cleanup. They deal with the crime and the trash, my two biggest issues of the city. Deal with the trash, then deal with the crime, then everything else should take care of itself. But I'm semi flat on Baltimore City, and yeah. So guys, where can investors, if they want to reach out to you, Brad, how can investors, or somebody just wants to ask a question, where can they reach out to you?
Yeah, probably email's best. Brad at Escallop, ESCALLOP investments.com.
We'll make him a hashtag #1 city in Baltimore. #1 city in the U.S.
Palo Alto East.
Where can I like that? I mean, it's a great hashtag. Matt, where can people reach out to you?
Yeah, again, probably email's best. Matt at my last name, so DerbyRE for real estate. Matt at DerbyRE.com. I have a few Facebook pages, Derby Real Estate Development and MattDerbyREI, which is, I guess you could say, an educational. I just kind of post some content about what I have going on and my 2 cents about real estate, typically, specifically local Baltimore real estate. So you can follow, comment, do all that fun stuff on Facebook, or just shoot me an email.
Yeah, and I'll put both your guys' contacts information up high in the video description. But thank you guys for spending your time with us, and thank you guys for listening to the content. If you guys think we're wrong, you think we're idiots, you think we missed an amazing area in Baltimore, you're like, this area is going to blow up, please leave it in the comments. Let us know what we missed, and we'll see you guys in another episode.